Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to be here breaking down a wild day in the markets for all you long-term investors out there. We've got a lot to cover, from geopolitical tensions shaking things up to some impressive rebounds in major indexes, plus standout movers and shakers. So let's dive right in and unpack what's driving the action, always keeping that long-term wealth-building perspective in mind. First up, the big story dominating headlines is the escalating conflict in the Middle East with Iran. Tensions are high, especially with the Strait of Hormuz, a critical oil shipping lane, facing disruptions. This has sent ripples through energy markets, with oil prices spiking on fears of supply issues. Analysts are warning of potential jumps in Brent crude if the situation worsens, and there's chatter about inflation risks creeping back into the picture. On top of that, the Fed's latest Beige Book paints a stable but choppy U.S. economy at the start of 2026, with stubborn inflation and a cooling job market adding layers of uncertainty. For us long-term folks, this is a reminder to stay vigilant. Geopolitical shocks can create short-term volatility, but they often fade as markets adapt. Now, let's check the pulse of the market with today's index performance. Despite the global unease, U.S. markets showed some grit. The S&P 500 climbed nearly 0.8%, signaling resilience amid the chaos. The Nasdaq outdid itself with a solid 1.3% gain, fueled by tech strength, while the Dow Jones edged up about 0.5%. Even the Russell 2000, representing smaller caps, popped over 1%. Interestingly, the VIX, often called the fear gauge, dropped over 10%, suggesting investors might be betting on a quicker resolution to Middle East tensions. For long-term investors, this bounce is encouraging, but keep an eye on whether this momentum holds or if it's just a breather in a volatile stretch. Zooming in on the S&P 500, the index's ability to shrug off early week losses tied to the Iran conflict is noteworthy. Analysts are pointing to strong earnings momentum and sectoral support as key drivers. Some even argue that bearish sentiment might already be priced in, creating contrarian opportunities for patient buyers. As long-term players, this kind of resilience in the broader market is a green light to stay invested, though diversification remains key with these geopolitical wildcards in play. Over on the Nasdaq, tech continues to lead the charge with a standout performance today. We're seeing robust gains that reflect optimism around AI infrastructure and semiconductor strength, despite broader market jitters. This aligns with reports suggesting the bull market could stay intact thanks to liquidity and sectoral tailwinds. For us long-term investors, tech's dominance is a trend to lean into, but let's not ignore short-term corrections as potential buying moments. Speaking of tech, let's spotlight some of the day's large-cap winners. Micron Technology soared over 5%, riding the wave of renewed investor confidence in chip demand. Advanced Micro Devices also impressed with a nearly 6% jump, while Intel matched that with its own 5.75% gain. Outside tech, Arista Networks spiked over 8%, and Shopify wasn't far behind with a 6% rise. These moves signal strong sector momentum, especially in tech, which could be a short-term trend worth watching. For long-term strategy, these names reinforce the importance of having exposure to innovative growth sectors. On the flip side, not everyone had a great day. Among the large-cap losers, ConocoPhillips slipped over 2% as energy stocks felt pressure from profit-taking after recent oil price surges. Royal Caribbean Cruises dropped nearly 5%, likely tied to concerns over travel disruptions amid global tensions. United Parcel Service and Baker Hughes also took hits, down around 2.4% and 2.6% respectively. For us long-term investors, these dips could be noise unless they signal broader sector weakness, something to monitor in the coming weeks. Looking at the most active stocks by volume, Nvidia and Tesla were buzzing as usual, with Tesla posting a solid 3.4% gain today. Intel also saw heavy trading, reflecting its strong performance among chip stocks. Ford and Nokia rounded out the list with modest upticks, showing steady investor interest. High volume often points to where sentiment is strongest, and for long-term folks, it's a reminder to focus on fundamentally sound companies amidst the daily noise. Diving into the market movers, the usual suspects like Nvidia, Apple, and Microsoft are in the mix, with Amazon also catching eyes with a nearly 4% jump. Palantir surged over 4% as well, boosted by geopolitical tensions, enhancing its defense and data analytics appeal. These movers highlight where capital is flowing right now, and for long-term strategies, they underscore the value of staying with leaders in tech and innovation, even if short-term volatility persists. Shifting gears to earnings, this week is packed with reports from notable names. We've got Costco Wholesale on deck, expected to reveal insights into consumer spending trends. Viva Systems and Zscaler are also reporting, offering a glimpse into tech and cloud services demand. Okta and Broadcom round out the list, with Broadcom especially critical for gauging semiconductor health. After last week's results, Ross Stores delivered a strong beat, signaling robust off-price retail demand, while Bath & Body Works also impressed with solid holiday sales. For long-term investors, earnings season is a goldmine for assessing company health beyond daily market swings. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into these results. Peaking at the top-performing large caps over the past week, Garmin led with a massive 21% gain, while Lumentum Holdings and AppLovin both climbed around 15%. Shopify and Occidental Petroleum also posted double-digit gains, reflecting strength in tech and energy. These weekly movers can hint at emerging trends, and for long-term portfolios, they're worth noting as potential areas to allocate capital if fundamentals align. On the other end, some large caps struggled over the week. Genuine Parts Company tanked over 20%, while Rivian Automotive and Blue Owl Capital each fell around 14%. Okta and BridgeBio Pharma also saw significant declines. These drops might spook short-term traders, but for us long-term investors, they could spell opportunity if the underlying businesses remain solid. Wrapping up with sector performance over the past week, industrials topped the list with a 2.1% gain, followed by consumer cyclical at 1.6%. Energy also shone with a striking 4.6% jump, no doubt tied to oil price volatility from the Iran conflict. These sector moves highlight where short-term momentum lies, but for long-term strategies, they're a reminder to balance exposure across industries to weather unexpected shocks. On the weaker side, healthcare lagged with a 0.6% drop, while utilities and financial services also dipped slightly. These underperformers might face short-term headwinds, but for long-term investors, they could present value plays if you believe in their recovery potential over time. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and I hope this breakdown helps you navigate the ups and downs with a clear, long-term focus. Be sure to stick with us for more daily summaries and in-depth SWOT analyses to keep your investment game sharp. See you tomorrow for the next update.